Good afternoon, everybody. A nice short, sharp one here today, and there's a couple of tools that we're going to just release after it. I think the life in the build and construction game at this time of the year is coming into Christmas can be difficult with shutdowns and so on. So we thought, you know what, let's just release a nice little tool. And whilst it is a relatively basic tool, you'll be surprised how helpful these tools can be. Particularly if things get tight over Christmas, which often they do. And if the only thing that we do today is give you a little tool that can reduce your anxiety over Christmas, knowing that you'll be safe, well, I think we've done a good thing. So I think we'll I'm going to hand across to Daniel. Daniel's going to share his screen and share this tool, and we're going to run through it. And then we've got a couple other little tools that we can flick to you as well after the event, which may come in handy as well. These tools are relatively straightforward, and you should be able to use them yourself. Of course, if you run into trouble, you can give us a yell. So, Daniel-san, across to you.
Yeah, thanks, Mick. Appreciate the warm welcome, mate. And yeah, look, everyone, thanks for having a bit of time this evening just to jump on board and obviously jump on this subject, cash flow. Christmas comes every year. We know it's coming. Cash gets tighter. Things get more and more interesting. Cash obviously slows down, but obviously cash keeps going out while you're paying people and suppliers and creditors and the like. And we thought it'd be a really good time just to sort of send out a bit of a overview and go, hey guys, let's just take stock. Again, coming up to that Christmas period, it's getting busy. What's happening with your cash flow? So look, part of our piece with our clients and obviously value partners and the like is just to release a cash flow template, just try and help you get through the Christmas period. So we have a number of tools, as Mick sort of touched on as well, that we will release after this. We have 12-month cash flows, daily cash flows and the like, but we really wanted to narrow the focus down around that, that pain point over Christmas. And we'll take you through a bit of an exercise now, or a bit of a cash flow template that we have used and developed over on our side, and hopefully that adds a bit of value and obviously overlays a bit of a plan for the Christmas period that's coming up. So just to touch on again, we will release this after the workshop this evening, but what we have here is a pretty basic cash flow overall, and I'll just sort of go through this at a very high level as well. So up the top here is just a bit of a visual as to what's happening with your cash over the next sort of 4 months once it's all populated. So we have got cash outflows, which are the red bars down the bottom here. Your green bars are your cash inflows, so receipts from clients, customers, if you're selling assets, COVID payments, or the like. And what you want is that blue bar here, which is net. So some are cash in, some are cash out. You want this blue bar to be above that zero line. And that's how this process works. If you see this blue line dip below the zero figure here, you're in for a bit of strife, and we need to sort of rejig this plan to make sure you guys stay cash flow positive during this Christmas, New Year's period. So the way this piece works, it is broken into, 3 sections on this cash flow dashboard piece. So this visualization here, just cash in and cash out for the people that like graphs. Coming down a little bit further here, we have a summary cash flow position. So pretty simply, we just isolate October, November, December, January. This 4-month period, you enter your opening cash flow balance here. You have your cash in over the next 4 months, your cash out for the next 4 months, and your closing cash. So again, you don't want this closing cash balance to zip below zero, otherwise you've got a bit of a problem. And I guess in this example here, just for demonstration purposes, we have highlighted this, and the spreadsheet will react that way and go, hey, there's a bit of a red mark, or a bit of a problem here. We need to have a bit of a revision. So that's the summary. Again, this is the visualization. This is the detail that sits behind the graph up the top, and then this is all the detail. This is cash receipts, so obviously money in. And then all these sections down here, we have tried to itemize, just for lumpy expenses that you might have over the next 4 months. So payroll, ATO payments, loan repayments, and then creditors, which is separate to all this as well. So we have sort of tried to keep it really sort of tight and concise. And then from here, particularly with creditors and your cash receipts, we have got feeder sheets. So you can itemize out individual projects, where they're up to, how they're working, project ABC, renovation ABCD, ad hoc cash payments, which might be sale of assets or COVID relief payments or whatever it happens to be. And basically you just cash flow that in over the next 4 months as to where you think it's in. And then just keep in mind as well, it's not invoicing, it's when we think the cash will land or when the cash will go out. that's probably just a quick important piece just to touch on here. So, and then we have the same for creditors as well. So I've tried to separate it between COGS, so it might be subbies, material purchases, stock, whatever it happens to be. You can call them by supplier name. So basically you just enter, I guess you just start to enter the contract in here. So contractor 1, and you can enter whatever figure you want in here as well. So 50,000, 60,000, whatever you think it'll cost you to sort of keep that, I guess, keep those individuals moving while your business goes over that Christmas period. So any sort of questions or details as far as sort of just jump on to the next piece? So just to summarize, here's your summary of cash in and out. Here is the detail. And then all these blue cells here, the user enters in detail, and I guess these input sheets too, just to sort of feed into this front section.
Yeah, so that's a nice little summary there, Daniel. I mean, these tools are relatively, we've tried to design it such that you don't have to be an accountant to be able to use this tool. It's pretty straightforward. And like I say, it'll give you a pretty good indication as to what the next 4 months looks like. And this is, cash flow is obviously a bit of a moving feast. It's something that changes almost by the hour sometimes. So, you can update this quite regularly, almost daily, and then we do have a daily cash flow tool, and I'll talk about that a little bit later on. But Daniel's going to jump into a bit more detail now.
Yeah, thanks, Mick. Just for pushing on as well, I mean, we do want this to be a little bit interactive and a bit two-way. So if you have any questions or anything along the way, just drop comments into the chat function in here as well. And look, we'll either sort of pause as we go through, or Phil will give me a nudge very kindly, and I'll sort of jump on them where I can, or Mick will. Or we'll have a bit of a Q&A session at the end to sort of talk about high-level bits and pieces. So how this works. We do have an instruction sheet on the front here as well. So when this model does go out, there's 4 or 5 steps here. If you sort of follow them through, hopefully it's fairly intuitive. We have tried to keep it as basic and lean as possible. But look, if you do follow these steps, it should be relatively easy to mash your way through this. If not, you definitely have our numbers, and we're happy to help where we can. So jumping into the cash flow here, and again, we've dropped some numbers in here for demonstration purposes only, but if we sort of just jump down to the payroll section down the bottom, basically if you see any blue cells, you can enter data in here. So say your payroll is going to be $40,000, for that month, or whatever it happens to be, just override $40,000 in there. Just be really careful with your pay periods too. If it's a 4-week pay run or a 5-week pay run as well, paying out any annual leave in advance to employees too. I'm not sure how each of you run your business, but just be, I guess, really careful of any little bits and pieces like that. So basically just work top to bottom. We have our 4 months across the top. All these cells here are data entry that best fits your business. So we have, payroll, your net wages are your cash. So it's not gross wages, it's net wages, because again, keep in mind, it is a cash flow tool. Work cover installments, if you're here based in Queensland, usually it's monthly installments. Keep in mind, I guess payroll, ATO, payments, BAS, GST, Page Golf Holding, make sure you do push these in as they do full due month to month as well. Loan repayments too as they bubble along. And then when we get to creditors down the bottom, this feeds off another sheet here. So given, I guess depending on the nature of your business as well, you might be a higher volume business or a low volume business as far as creditors go. You might have multiple suppliers, contractors. So we wanted to give you a bit of a tool that sort of let you plan out individual contractors, if that's the way you sort of like to do it, or you can lump it against one line. And like I sort of touched on before, you can have, subby A, you go, oh, look, I pay this guy or girl, whoever it is, 50 grand for this month. I know there's some other project that works on the go, so I'm not going to pay them 100 grand the following month. It's going to be really quiet over Christmas and January. Look, we might try and defer some payments and push out a little bit, so there might be a little bit of a spike in January as well. So just try and apply as much science as you can when entering each of your creditor lines in here. But for each line you enter in here, it'll sum up down the bottom, and it will punch through to this front sheet here. So as you can see here for October, there's $151,000 here. If you come back to the creditor inputs, there's your $151,000. So when overlaying this, try and split it between cost of goods, subbies, materials, stuff that keeps your business moving, and then overheads, so stuff that sort of ticks along month to month, or I guess your fixed costs like your rents, telephones, mobiles, R&M, car servicing, anything in the background, internets, and just try and itemize that out as much as you can. I have changed a few of these as well to try and make them a little bit intuitive too, sort of help you along and coach you along. The other piece I've recommended here as well is just write yourself like a couple of little comments, just to give you a bit of contextualization behind these numbers too. You know, hey, if it's for this person, you know, I'm trying to move payments from December to January, maybe write yourself a comment. You know, rent, you might have multiple sites or multiple fixed sites, you know, just maybe just write yourself a short comment as to what they are, just so you know where you're sort of up to as you begin to reforecast this out. So just quickly to summarize the creditors side, or I guess the cash outflows, we've touched on payroll. And again, you can adjust all these payments here. ATO payments, you can override any of these with anything you want. Don't be scared to have a bit of a play. Loan repayments as well. Again, that's what gets direct debited from your banks, I guess, from your bank accounts generally. There's also a separate line for credit cards too, from miscellaneous spending, Christmas gifts, etc. Just be really mindful of that seasonality. Just be aware of that. And then the creditors, which comes in that creditor input sheet. The only other final piece to round out here is just the cash inflows, and that comes from customer inputs. So basically, if you're working on a project or you're waiting on payments from the bank, or basically wherever your cash is coming from for the next 4 months, make sure you either itemize it project by project or put it down month by month across the top, and then anything ad hoc as well. So if you're planning on selling a car, or you know, you're getting some sort of government relief payments or whatever it happens to be, you can have your ad hoc stuff down the bottom too. So it's important to separate that out. So up here, you have your consistent month-to-month project or your core business, and anything ad hoc as you're sort of looking for cash and options, you can itemize that out here as well. Hopefully that makes a bit of sense just before we move on to the next part. If anyone has any questions, or Phil, I'm not sure if anyone's jumped on board yet. No chat. Okay. Cool. So just to summarize, cash inflows, green bars. So obviously all the hard work you do down here, entering all this data. Obviously cash inflows, all the hard work entering cash in, all the cash out, contractors. This will then feed into this top sheet up here to show you cash in and cash out. We want to keep this blue bar above the 0 mark. And down the bottom here for people that love numbers, cash in, cash out, and your closing balance, and we want this number to remain black. We definitely don't want red, otherwise it is red, and you know, we definitely need to go away and re-strategize how we sort of turn that into the black. So from there, what we have done as well is that, say you do your best efforts to plan all your cash flow in, it's still landing on the red, and go, right, you know, what strategies do we have available to us to try and get either this number here into the black, or, you know, can we defer these payments out, or can we spread costs around? We've actually built a little bit of a scenario generator off to the side as well. So we'll send out instructions with this email, but if you hit this little plus section up the top, we have built in like a little scenario generator here. So it's almost like a bit of a what if analysis. You know, what if we got sales in earlier, or what if we got creditor payments down, or, you know, we reduced our inventory count, or, you know, we deferred our inventory purchase for another couple of months. This sort of lets you hypothesize out a couple of scenarios at a really, really high level. So with this section here, it's pretty simple. There's basically 2 component parts. One's the cash flow. This is how you leverage it or adjust it up the top here. And then this is your new cash flow. And this is exactly the same as this section over here. So if you notice the $190,000 cash loss position, you notice that the same number appears over here. And because you have zeros and our levers across the top, it's exactly the same numbers down the bottom as well. So there's comments and stuff all over the place here for everyone on the call at the moment, but we have 2 really simple levers here at the top. You know, what if we improve sales, or I guess got our cash receipts in by a percentage? It might be 10%. Or what happens if, you know, say some of our clients or customers didn't pay us? You know, if our cash position dropped by 20%, it lets you sort of map out a few scenarios and a few options in this cash flow piece. So just to reiterate, all the hard work you've done here and on these input sheets feeds across into this top cash flow section. You then enter percentages across the top. You know, so say you got 10% better prices from your creditors, or you managed to defer some payments. It then flexes in some savings, or, you know, the other way around. If you put negatives in there, it's unfavorable movements. What does that do to our cash flow? So this mirrors exactly what's over here. Say we deferred some of our creditors and we got 10% savings across our creditors for whatever reason, and we managed to get our cash receipts up by 10%. We had a sales push or a sales drive, whatever it happens to be. What does that do to our cash flow? And as you can see here, this was our cash balance. And if we sort of get these two levers pulled, whether it's initiatives or planning or whatever it happens to be, this is what it does to our cash down the bottom. So in this example here, it's not quite where we wanted to land, but you can begin to play with some of those numbers and go, hey, if we did these initiatives or if we can improve these elements by 10, 15, 20%, what does that do? And it can help sort of narrow your focus a little bit. Any questions around that one? I'm open to feedback too, guys. So if you want me to sort of touch on anything in a bit more detail or anything there at all, please let me know.
Hang on, Nick.
Can't hear you, Mick.
Sorry, I said, Adam, you got your hand up there, mate. You good?
I do. I was thinking though, like it looks like it's pretty simple to like just add on. Like obviously this is for the next 4 months, but
yep.
It looks pretty simple, like an Excel sheet, just to make it like a 12-month thing. Or like obviously it'll get pretty grey the further we go out. Like the less is known as far as income and what we owe, but it looks pretty easy to replicate.
Yeah, I mean, that sort of brings us into the next piece, I guess, is cash flow is really hard to predict, obviously. It's easy in the short term. So in the next 16 weeks, it's relatively easy, as you just said, point out rightly, Adam. After that, it gets tricky. And typically, when you're an accountant and you want to project out cash flow over long periods of time, you have to do that off the back of a profit and loss statement as well. So it does get a tricky it's a tricky tool then. And there are other tools that we have, actually pieces of software that do it for us as well. This is really good for this sort of scenario, I think. And we were going to bring up there's a daily one as well. I mean, I remember, I don't know if anyone's had anything to do with the big banks and how they operate, but they have your bank manager who's really just a salesman these days and a sort of an account manager, and then you have your credit managers, and so those guys send all their stuff into credit, and credit make a decision, but you never ever get to meet or know who credit is. No one ever tells you who they are. And I had a client, this is a couple of years ago now, and he was in the built environment. He wasn't a builder. He was in a game that required heavy capex, and he owed the bank 10 million, and the credit manager wanted to come and have a chat, and he sat down, and they were in a bit of strife, and he sat down and said, you owe us 10, and it was one of the big 4 banks, and he said, we want some of it back, and you're either going to do that yourself or we're going to do it for you. And so they, in other words, reduce your bloody debt with us because it's too much, and you're not going well, and we're getting nervous. And so they actually switched out to a daily cash flow for probably 3 years, I reckon. And so if you want to just pull that one up, Daniel, we might have a quick squiz at that now, because this is, if you really get yourself in deep trouble, I've seen this used quite effectively. And that was probably my best scenario, where they literally, it was a day-by-day proposition for them for about a 3-year period while they figured out, they sold some stuff and reduced debt with the bank and got their way through it. But they literally, what they did is, you can see it up here. It's very similar to the tool that Daniel just said. We just tidied it up a little bit, actually. In fact, when we originally put this tool together, we used their tool that they were using, and then just changed it to suit this environment. But they literally, as the days passed, they would make them green and put the actuals in for that day. And then every day forward was the forecast of what they thought. And then they would change it every day, whilst they got their way through it to try and obviously keep cash at bank. So this is a nice little tool as well. But this one here, it's really only if you get yourself in a bit of strife, or it's really, really tight to the point where if you don't know if you're going to make wages, then you pull this tool out. And like I say, I've seen it used quite a few times, but one time particularly that sticks in my mind was that scenario that I painted before. very effective for, again, 60 to 90 days. After that, it becomes a bit of a pig and a poke. You're sort of guessing a little bit. But if you want to know what survival looks like for the next 60 to 90 days, if you got yourself into that situation, then and a lot of businesses, or many businesses, find themselves in that spot from time to time. This is the tool. So we'll send this one out as well, and you can use that or even just tuck it away. And if you ever find yourself in this situation, just pull it out. And like I said, these are not hard tools to use. They're not overly complicated, but they're actually very, very useful. Cool. Well, we'll nice, short, sharp one here this afternoon. Hopefully, everyone got a little bit out of that. But I think the tool is the main thing. So we'll send that off to everybody. And like I say, if you've got any questions, just flick us a note, give us a yell. Happy to field any questions that anyone's got about how to use the tool and how they might be able to manage their cash flow. If anyone's in strife and they do need a hand, just give us a yell. As well, in terms of just not sure if they can make the squeeze through Christmas. Otherwise, I think I'll hand it over to you to bid farewell, Daniel.
Yeah, thanks, Mick. Look, really appreciate everyone jumping online this afternoon. Look, I know it's probably been a busy day and the like, and again, just really appreciate you carving out some time. I mean, Christmas is a tough period, and look, there's no point sort of burying your head in the sand and hoping everything's going to be okay. I guess now's the time to plan, and kudos to you guys for jumping on board and interacting with us. Like Mick said, we'll punch out the templates after this. Hopefully my commentary around how to use it was adequate. But again, any questions, just shoot us an email back or give us a call, and we'll see what we can do over that period. Thanks.
Cool. Thanks, Daniel. Thanks, everybody.